Silver and gold are soaring higher, but things are just starting to heat up. Trump has raised global tariffs to 15%. How will this affect gold and silver? And what will happen when the Chinese markets open tomorrow for the first time in over a week? Let's get into it. Today is Monday, February 23rd, and the metals are up. Silver sitting at $87.95. It's up $2.86 or 3.38%. Gold is also up big today, sitting at $5,220. It's up over $100 or just over 2% on the day. But when we look at the gold silver ratio, we have a ratio alert. It is now under 60. I repeat, the GSR is under 60 to 1. Once again, that's less than 60 ounces of silver to buy 1 ounce of gold. And this is a huge change for my buying strategy. When it goes below that threshold, I go from buying both gold and silver to focusing mostly on gold. And if we see the ratio continue to drop, at some point, I'm going to be looking to trade my silver for gold once again. I did that 3 times earlier this year when the ratio was down in the 40s.
The gold to silver ratio has now fallen below 60 to 1, meaning fewer than 60 ounces of silver are needed to purchase a single ounce of gold. Historically, this threshold marks a strategic turning point. When the ratio compresses, silver has typically outperformed during the early stages, but as it tightens further, gold often becomes the preferred store of value. Earlier cycles saw the ratio drop into the 40s before reversing sharply. For disciplined investors, this shift may signal rebalancing opportunities. The ratio is not just a statistic, it's a roadmap for capital rotation within the metals market.
In my video last Friday, I showed how silver needed to go up just a few more bucks to once again pass up Nvidia and sit at the number 2 spot on the top assets by market cap. It has now done that, and it is sitting at its rightful place right next to gold. And I want to point out a few other things on this list. Bitcoin is still in the number 13 spot, Bitcoin down to $65,000 per Bitcoin, and there are a couple other precious metals on this list. We've got platinum at number 28. We've also got palladium at number 55. And for all you crypto lovers out there, there's one more crypto on the list, Ethereum, sitting at number 82. But the big news is that silver has once again retaken that second spot. Now, it's never going to pass up gold, but it's possible that if silver keeps going up, it'll stay above these companies forever. As many of you know, Trump recently raised global tariffs from 10% to 15%, and one of his goals has been to weaken the dollar, and this is certainly having the desired effect. When we look at the US dollar index, you can see it is down quite a bit today, and whenever the dollar is down, I'm expecting gold and silver to be moving higher. That is exactly what we're seeing right now. But the truth of the matter is, all of the stuff going on with tariffs is not ending. It is actually getting worse. Trump put out this tweet earlier today: any country that wants to play games with the ridiculous Supreme Court decision, especially those that have ripped off the US for years and even decades, will be met with a much higher tariff and worse than that which they just recently agreed to. Buyer beware. So I would expect more volatility, and when it comes to the tariffs, some people have been asking, will they apply to precious metals? The short answer is no. Here's the White House fact sheet on the upcoming tariffs. Some goods will not be subject to the temporary import duty, including certain critical minerals or metals used in currency and bullion. So that's going to include gold, silver, and even platinum. The US Mint sells all three. They do have some palladium coins that they put out every year as well. So I would expect that none of the precious metals are going to get tariffs placed on them.
Silver has reclaimed its position among the world's largest assets by market capitalization, briefly overtaking major technology companies and reinforcing its renewed relevance. Meanwhile, Bitcoin trades near $65,000, still holding a top-tier asset ranking, while platinum and palladium remain further down the list. Ethereum lingers deeper in the standings. The reshuffling highlights a broader theme: tangible assets are regaining influence. As inflation lingers and currency volatility rises, investors are rediscovering hard assets. Silver's climb reflects both industrial demand and monetary appeal, a rare dual identity that strengthens its long-term narrative.
Now, perhaps the biggest news for the week is that the Chinese New Year is ending, and we're going to see gold and silver trade in China once again starting tomorrow. But what does this mean for precious metals? Will they be going up or down? Well, Hugo posted this on X. Pressure is redlining for silver as the Shanghai Gold Exchange and Shanghai Futures Exchange prepare to reopen this Tuesday. Implied volatility at 88%. And here's the kicker: Shanghai Premium around 10.5% above LBMA. So we know that China has been driving silver price both higher and lower as of recent. However, I know there is an incredible amount of anticipation for the markets to reopen in China, and I do expect volatility, but part of me thinks that metals will be moving higher. One of the reasons, well, look at this post by Just Dario. In China, the Shanghai Futures Exchange and Shanghai Gold Exchange are still closed for trading today, but many businesses are back in business. This morning, the largest recycling firm in Shenzhen is offering already $95.40 an ounce to buy back 4/9 fine silver. That is a huge premium above where silver is right now. And when it comes to gold, look at this. Gold shops in China have stopped selling gold and are refunding contracts. Extremely severe gold shortage to send gold to $10,000 an ounce soon. That's pretty wild. It would literally double the price of gold from where it is right now. But I guess these gold shops are not selling gold bars, and all of the deals they made before the holiday, they're basically scrapping those because they think the price is going much higher.
Recent tariff increases, rising from 10 to 15%, have added new friction to global trade. At the same time, policymakers appear comfortable with a softer U.S. dollar, which historically supports commodity prices. The U.S. dollar index has weakened in recent sessions, amplifying gold and silver's momentum. Importantly, official guidance suggests bullion and currency metals remain exempt from new tariff measures, limiting direct impact on physical gold and silver markets. However, escalating rhetoric and geopolitical uncertainty are fueling volatility expectations. When trade tensions rise and currencies wobble, precious metals often respond decisively.
One expert shared a very bullish prediction yesterday. He says the decline in gold to silver ratio that started in April of 2025 could end by April 2026, reaching 2011 levels of around 30, if not lower, with gold at 7.5K and a gold silver ratio of 30-1. We could expect a $250 silver price. If gold goes to 8K and the GSR goes down to 20, silver could soar to $400. But that would be less realistic option, in my opinion, for the present cycle, but not impossible. Gold Silver HQ posted this chart yesterday, and I think it paints a great picture for why we should all be considering gold and silver right now. He says, exponential growth can be great or dangerous. This chart is showing the global total debt over time in trillions of US dollars. It's now up to $350 trillion in 2026, and it is going higher and higher every single year. Many of us know that all fiat currencies eventually go to zero, and the only wealth that's going to be left when it's all said and done is the alternative assets, gold and silver.
With Chinese exchanges reopening after the Lunar New Year, traders anticipate heightened activity. The Shanghai Premium for silver has recently traded well above Western benchmarks, signaling tight supply and aggressive local demand. Reports suggest elevated buyback prices for refined silver and strong appetite for physical gold. China has played a decisive role in recent price swings, both upward and downward. As trading resumes, volatility could spike sharply. Whether prices surge or retrace, global markets will be watching Shanghai closely. The reopening could provide the next directional catalyst for the metals complex.
I'm so curious to see what's going to happen to silver price when the markets open in China tomorrow. I definitely expect to see some massive volatility, but also there's so many other things going on. There's the tariff threats, there's geopolitical uncertainty and fear, potential wars going on. So I think this week could be one of the biggest weeks for silver, and it's possible we could go over $100 an ounce once again. Certainly that's possible in China. They're still trading at a massive premium premium to the COMEX.
Global debt has climbed toward $350 trillion, according to recent international financial estimates, continuing a relentless upward trajectory. Throughout history, expanding debt burdens have pressured fiat currencies and strengthened alternative stores of value. Some analysts now project that if the gold-to-silver ratio compresses further, potentially toward levels last seen in 2011, silver prices could experience dramatic upside. While extreme forecasts remain speculative, the broader macro backdrop supports sustained interest in precious metals. This week may bring turbulence, but the long-term narrative is clear. Hard assets are increasingly central to the financial conversation.